Here's why I don't invest into the stock market. Now, many people, when they think about investing, one of the first things that comes to their mind is investment into the stock market. Although I think it's a great investment for some people, I don't believe it's a good fit for my portfolio. Now, later on, maybe my opinion will change. I believe that I need to be focusing on assets that can cash flow, because at the end of the day, if you're buying stocks, you're buying into the performance of a single company. Now, if you're buying into an index or something like that, that's a little bit different. But if you're buying individual stocks of a company, let's say Microsoft or Apple or Amazon, your performance is tied to the performance of that company. And so if any negative news comes out, that could mean that you could potentially lose money with that investment. If positive news come out, then you could potentially make a lot of money on that investment. But I don't like that aspect of stocks because it could just fluctuate so much just on one piece of news about a single company. So for me, I like to be a little bit more diversified, and I specifically want to focus on physical assets. One of the biggest things for me is buying up assets that are luxury assets, that are high in demand, and that are not easily replaceable. I look for things that are truly special. I know you've probably heard about all these millionaires and billionaires buying these unique art pieces, or all these massive multi-million dollar homes on the beach. Think about why they're doing that. It's not because they need a 7th house or a 15th house. It's really not that. They could afford to stay at the nicest hotels and the nicest penthouses and all those things. They're buying those things to store their wealth because they're looking for places that they can park their money. As that piece of valuable real estate, let's say, appreciates, they could then take loans out against that property and have tax-free income. So they're leveraging this strategy where they're able to acquire these assets, which are super valuable. It has to be a valuable asset. This doesn't work if it's not a valuable asset. If you're buying something that's like kind of valuable or like, okay, it's cool, it will kind of work. But if you're specifically buying things that are in very limited supply, as we know, more and more people are making more money. We're seeing a larger divide between the lower class and the upper class. And so that upper class is making a lot more money. More of those people are starting to buy up these assets, and that's why you see luxury watches. They're in super high demand. You have to wait for years just to buy a watch from a retailer. And so some of these things like houses and watches and certain exotic cars, they're in such high demand that the price just keeps going up and up and up and up and up because everybody wants it, but no more are being produced. So that puts you into a unique situation as an investor where you could take advantage of what's going on in the market. If you see that rich people are buying up beach houses in this specific neighborhood on this specific beach, think about it. That beach doesn't go on forever. That beach has a certain starting point and a certain ending point. Everybody started buying houses on that beach. Guess what's going to happen? They're going to start attracting richer and richer people. You're going to start seeing all these wealthy people buy these houses, and they want to own as much real estate on that beach as possible. And guess what? That real estate is not replaceable. You can't just extend the beach. You can't just make it bigger. You can't make it longer. You can't do that on the beach. When these people are buying up properties, they're buying something that's a long-term investment, and they're going to let that ride. And they're basically going to park their money there. They're going to put maybe 10-20% down. Sometimes they're not even paying off the whole thing in cash. Sometimes they do, but a lot of times they're using leverage. First of all, they're using maybe, let's say if it's a $10 million house, which is unlikely, but let's say $10 million, they're putting $2 million down and they're acquiring a $10 million asset. I think that's one of the most beautiful parts about real estate. You could do that and you can now control a $10 million asset. So now that you have this $10 million asset, guess what? They could rent it out. They could just let it sit there. But as demand grows on the beach, everybody wants to be part of this beach. So now that value of that house can go up to 15 million or 20 million. As the value of the house grew, they only need to maintain 20%, let's say. So 20% of a $20 million house is only 4 million. But if it just went up $10 million in value, and they already had 2 million in, right? So their total equity portion is about 12 million. So that means that they could refinance, cash out $8 million, keep $40 million in the deal because they need a minimum of 20%. And now they just got $8 million cash. What, do you think they're going to pay taxes on it? They're not, because this is a loan. You can't pay taxes on a loan. So this is non-taxable income. So now they're just using their cash for whatever they want to. It's likely that they have tenants in there or something that are actually renting out the house, and they're using that money from the tenants to pay down that house. Not only did they buy a $10 million asset, Not only did it double in value in this specific scenario, but they're also using the tenant's cash flow to pay off that house on the beach, which maintains their luxury asset, and they have a spot on maybe one of the most prestigious beaches in the world. This is a strategy that many millionaires and billionaires are using all around the world. They're buying up these houses and these luxury assets, these art pieces. The same thing can be done with art, by the way. They buy art, they can finance art, they can refinance art, pull cash out, but they're using these holdings, these luxury assets, these things that are illiquid to create liquidity if they need to take a loan out against them. And they're very secure because they're collateralized loans. So they're not having to pay a large interest rate because they have real assets backing these loans. This puts them in a really great position, especially if the economy continues expanding and growing and all these things keep going up in value. If inflation hits, guess what? They own a valuable asset that's going to be valuable in any currency. It doesn't matter if we're using the dollar or the euro or British pound, or it doesn't matter what currency we're using. We have a valuable asset under our control, and we can always take loans out against it. If we start transacting in Bitcoin, we could literally just take out a Bitcoin loan against this asset. I probably wouldn't take out a loan in something that's so volatile, but I would definitely look at other opportunities in whatever currency we're currently using to leverage this asset as collateral and take loans out against it, and to use it for whatever I need to use it for, my living expenses, whatever it may be. Or I could also take out a loan against this asset and use that cash to invest into something else. Now I'm growing my passive income, I'm growing my net worth because I'm buying more luxury assets, and I'm putting myself in a position where eventually, once they start getting paid off, I can start taking out more loans against them and start expanding and expanding and expanding. And that's how you grow a portfolio. That's how many people have done it. They buy these luxury assets. Once they're paid off, sometimes they take a loan out against them, sometimes they buy more assets, and they keep growing their illiquid assets because that allows them to grow their net worth exponentially. Alrighty guys, as I've explained in this video, I prefer investing into luxury assets that I can leverage for different purposes, sometimes cash flow, sometimes just a buy and hold, sometimes just long-term appreciation. The reason that I like those is they're just a little bit more stable than sometimes some stocks or different things that you can see in the financial market. So if you guys want to learn more about luxury assets and investing into things like this, private jets, exotic cars, luxury houses, multifamily real estate, I have a program that explains more on this. Check out my website in the description, and I'll see you guys all on the next video.